All right, we're live. Here's what we know. A couple of things hitting investors at the same time. And if it feels like we are starting to feel a lot of weight suppressing the stock market, you would be right to feel that way. So we're going to go over quickly a couple of things, what we know, what we should consider, and where I think we're going with this suddenly ice cold market in the hot days of August. So let's run a quick intro. We're going to get into this, and I've got to be off in about 4 minutes. So this is going to be a real quick episode. I just told my partner we're skipping the live stream, but there's just too much going on today, and it turned out to be an important time to speak with you. Here we go. Everybody, Mitch Goldberg here, coming to you from a somewhat hot and sunny and steamy Melville, New York on Long Island. So here's what we know. The stock market has been in a downtrend. Last week was the second week in a row that the NASDAQ was down. The first time we had a 2-week losing streak, believe it or not, since January. That's how tame this year has been so far. The VIX has been low, meaning all measures of volatility have been really very flat, just very tame market. No better way to say it than that this year. But it does seem like we've got some things weighing in the market. We've got a loss of enthusiasm on the part of stock buyers. A lot of investors feel, and I think rightly so, stocks have come a long way very quickly, especially a handful of the large mega cap tech stocks. You know the names, the NVIDIAs, the Metas of the world, the Alphabets. If you don't know, Meta used to be called Facebook. They changed the official name to Meta. Google is now called Alphabet, right? Google is a subsidiary of Alphabet. Facebook is a subsidiary of Meta. Microsoft, Apple, they're giving it back pretty quickly, though. They were the ball of wax in the uptrend. They're the ball of wax in the downtrend. And when you see these stocks gap down $3, $4, $5, $7 a day, it's really hard for the market to get any kind of lift. You could take a smaller company like a ConAgra Foods or a Southwest, write those stocks down to zero. You wouldn't even feel it. You wouldn't even notice it. It would be a rounding error for the S&P 500 index. I said S&P 500, so now I have to say you can't invest directly. You cannot. Okay, you cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. So we have that going on. We have, believe it or not, decent news coming out of the United States with retail sales. Retail sales were quite strong. And it tells you that the consumer is still going strong. It tells you that the Fed is probably, that gives a little fuel to the thought that the Fed could stay higher for longer, keeping interest rates at 5.25% where they are now, maybe raise another one or two times. It's a little thing, the retail sales. It's not a huge thing, but you take that into consideration with GDP and the labor figures that have been coming out pretty good. The consumer is just very strong. But you add to that a cross current that credit card debt's at an all-time high, credit card delinquencies are back to pre-pandemic levels. See, we all wanted to get back to pre-pandemic days. We have to take the bad with the good. And credit card delinquencies are rising pretty quickly. Now we're faced with student debt. Student loans have to start to be repaid. Now, before someone says, oh, poor babies, they have to repay their student loans, they got a 3-year break. Nevertheless, it does mean less consumer spending, more money going to the loan servicing companies. So that's another thing weighing in the market. And then we have China. China was closed for COVID. We talked about this right here, that it doesn't look like China could really have a big rebound. But I think a lot of other people, I won't say names, but some major Wall Street strategists were thinking that China reopening would be a huge boon to the United States, to the world economy. Not happening. Their demographics just don't allow it. They have 3 times as many 15-year-olds as 5-year-olds. And their main source of consumer for every country are those people who are about 20 to 50. In China, it's shrinking rapidly. China's old. They have a lot of old people. And when you come out of the pandemic, the old people are just not spending money the way they did when they were younger. It's just the way it is. They have to hold on to their money. So China is just an absolute bust. There's no numbers came out today. I don't always trust Chinese numbers. They were a little bit of growth, but they are trying to, the government there is trying to stimulate growth with lower interest rates and targeted stimulus. I don't think it's going to work. They just don't have the buyers. They have empty apartment complexes, empty cities. I'm not saying every city is a ghost town, but they have definitely overbuilt, too much capacity, and with a rapidly shrinking population. I mean, rapidly, they've got the worst demographics of any country with any sizable economy. This is one reason why I don't think, by the way, that China can catch up to us. It's been said that China will become the biggest economy in the world and overtake the US. I don't think it happens. I think China's going backwards and we're going forward. India is the country that's a developing market with the best demographics. So that is those things. You put them all together, they're weighing in the market. Oil is tough to figure out. Oil should be going down because China is slowing, but OPEC and the Saudis have been very disciplined in curtailing production. And now Russia, because of the Ukraine war, the Ukrainians have developed waterborne drones. These drones can basically hit anything going in and out of the Black Sea from rim to rim, up, down, side to side. And they have said that any ship anything moving in the Black Sea is open game. So that means you're not going to see oil tankers coming in and out of the Black Sea going to the rest of the world. That cuts off a lot of distribution. China can't take that much more. They just can't get that oil. It's not possible to get waterborne oil from that side of the world all the way to China's east coast. So that's what's going on, and these are starting to weigh on the market. Who's out there? Okay, let's just see who's out there. Okay. Hey, Mitch, checking in to get my financial update. Thank you very much, Renee. I always appreciate you giving me all this wonderful support. All right, so I said this would be like a 4 or 5 minute video. We are live stream. We're already up to 7 minutes. So these things are weighing in the market. Last thing I'll say is there's a buyer's strike right now in the stock market. What do I mean by that? Anyone who wanted to aggressively buy stocks, buy in the cheap, play for that soft landing scenario has done so already. There are just no more buyers around. It's not that there's so much selling going on in U.S. equity markets. The buyers have exhausted themselves. We are now in the last 2 weeks of August. There's really nothing going on. And without anything major going on, nobody wants to commit more money to the market until they see what happens, maybe after we get the August labor figures in September. So we've got a while to go. And it just seems the path of least resistance for the stock market is down. And if you're a short-term trader, I don't think you could fight it. And if you're a long-term investor, it's not going to really matter anyway. That's my story. I'm sticking to it. I'll be back tomorrow. Have a great day.